Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Brian Stutland, Chief Investment Officer at Equity Armor Investments, to discuss if the bid we're seeing in volatility is a catalyst for the rotation that we're seeing and some of the reversal that we're seeing in stocks. Brian, it's great to see you as always. Welcome back to Trade Talks.
Thanks for having me.
All right, and Brian, before we get into the overall market, where it still seems as if stocks are struggling to find some discernible direction, let's go ahead and recap what you saw with Tesla earnings.
Well, it has been a choppy season here for most companies, but Tesla earnings were fantastic. The stock traded up in the morning, sort of brought the whole entire Nasdaq up higher with it. And the earnings look really good. I mean, I think the street out there is going to give Tesla a break, even though we're seeing more and more competitors come to the market. You know, for example, Mercedes just announcing their electric SUV to compete with the Model X. We're seeing more investors sort of give Tesla the first, in line here to come to market with things. And remember, Tesla is more than just electric vehicles. It has solar. It has the technology of the autopilot system that it continues to develop. So certainly a lot of good things going for it. I do like the stock, but however, I want to see it clear some hurdles here. I think 1100 is something I'm watching where then I would be a buyer. We do own Tesla in our Nasdaq fund that I'm a portfolio manager on because we own the Nasdaq. But if I want to add extra allocation to Tesla, I'm looking at that 1100 level to break through that before I get really excited about it.
And Brian, if we take a look at the markets overall, it seems as if, okay, the Dow is moving one way, S&P and Nasdaq 100 are moving in another. It seems to be tech versus everyone else in this tape.
It does. And this higher interest rate environment where we continue to see the 10-year note rise, where we continue to see the Fed indicate they're going to hike 50 basis points come this May, like we heard this morning. That has been a negative impactor on growth type names. So people are out there looking for value type stocks rather than buy technology groups. And that's why you're seeing those sort of outperform this year. A lot of it, though, is related to the commodity sector, which, ties to inflation. I think, it's still out there. The Fed is saying, oh, we'll raise 50 basis points. I think that's still way behind the curve right now. They need to be more aggressive. Otherwise, there's going to continue to be this, slight commodity lean in things of, buy what you need, not what you want.
Yeah. And Brian, when we take a look at the Nasdaq 100 overall, what are some of the key levels that you're watching?
Well, it's certainly interesting. The Nasdaq, like I mentioned earlier, Jill, it traded higher, but it couldn't get through this 14,200 level here and backed off. Now, it's been wishy-washy around a range, 13,900 on the downside, seems to be somewhat level of support. So I'm kind of watching that to see if we crack there. Another indicator I'm looking at, VolQ, which is the volatility index on the Nasdaq. If I see that trade above 29, it probably means a little bit more volatility coming in the market. And Jill, when there's more volatility, there's probably more downside in the market. So watch that 29 level on VolQ. That's something I'm paying attention to see if this Nasdaq can sort of hang in there on this sell-off back today.
Yeah. And, we're so early in the earnings season, and it seems as if a lot's going to be predicated on that. I think investors are looking for what guidance is going to look like. Of course, what happens with the supply chain, interest rate outlook, and so forth. It seems as if, last quarter, it was good. It was decent. We're getting some good numbers out now. But I think once we get more into the technology names, more into the retail names, that's really going to be the tell moving forward as, we navigate this first quarter earnings season.
I think that's absolutely right, Jill, because I think some of these growth companies and tech names really kind of need to blow things out of the water. Tesla, for one, had, like we mentioned, good earnings, and that was able to trade higher. A lot of these names have been beaten down. So if they can show some promise going forward, that will be great. But we saw Netflix the other day didn't look so great in terms of their subscriptions declining, and that stock got hammered. So there's going to be some level of volatility movement in some of these names as these tech earnings reports come out. So you've got to be paying attention, keep your head on a swivel here, and look for some nice positive earnings in order to get this Nasdaq through that 14,200. We're going to have to see some earnings in the next couple of weeks.
All right, Brian, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks.